Hey, Happy New Year, everybody. Just wanted to drop this quick video to talk about a few key points that I think traders might find helpful going into the new year. And also to talk about what you can do to be a more successful trader in 2022. Quick disclaimer, not a licensed financial advisor, and nothing I say should be interpreted as such. So, what was your biggest failure in 2022? Was it self-control? Was it greed? Was it lack of experience? Taking profits too early? Maybe taking them too late? So I spoke with several dozen of our members over the holiday weekend here. I found a few common denominators. Self-control and greed were the biggest issues I saw. And so that's what we'll touch on here first. So self-control and greed really go hand in hand, right? You can think of them like the scales of risk versus reward. They balance each other out, or they do the complete opposite. So what do I mean by that? Wouldn't you want to have zero greed and 100% self-control? Well, the answer might surprise you. Just like every human emotion, greed has uses that benefit us as well as negatively affect us. If you have 0% greed, you probably wouldn't be trading at all, right? You might just give away all your money. So greed is a motivator. Greed drives innovation. Greed drives success. But you don't want to be too greedy. Like most emotions, you want to keep it in check. Make it work for you, right? You should be mad sometimes, but if you're mad all the time, you might have a problem. That has negative effects, right? Now, on the other hand, get too greedy, you might find yourself behind bars. Or, in our case, you might find yourself with a wrecked account. This is where self-control comes in. Okay, self-control is something that you either have or you don't. And by nature, those who are greedy are also the ones with the self-control issues. So really, it's a double-edged sword. But not all is lost. There's things that you can do about this, okay? So what do you do? Well, I wish I had an easy answer for you, but it's a lot like quitting smoking. You know, there's dozens of ways, and more likely than not, you're going to fail several times before you're successful. But persistence is key. The common denominator is all these things involve effort on your part. No one can quit smoking for you. No one can quit drinking for you. No one can make smart trading choices for you. Okay? Now, I want to go over a few techniques that I think will help you going into 2022. Okay? So, first of all, make a plan. And don't just make a plan, but back it up with data and then stick to it. As you've probably all noticed, I'm now including key support levels on all of my alerts. One plan that one could employ is using the area just below that as a stop loss. So now I'm also planning to add key support levels to all of our alerts going forward. The same plan could be employed where you take profits just below that resistance level, right? So second, look for steady gains. Think of it like this. Every couple of weeks, how many stocks go up 3%? Okay? What about 5%? What about 10%? 25, 50, all the way up to 200%, right? There's a lot of stocks that move 5 to 10%. You're not going to find so many that go up 200%. It's much easier to find those stocks that can give small, steady, consistent gains. Okay? You may find it easier to concentrate on consistent small gains this year. That may just work better for you. Pair this with my previous point, and now you know where to walk away with either a loss or a gain and move on to the next trade, right? So, diversification. Lastly, what I really mean when I say this, first and foremost, is diversification of asset classes. The majority of any portfolio should always consist primarily of ETFs, right? What's an ETF? An ETF is like SPY, the S&P 500. So an ETF makes up the S&P 500, would give you exposure to hundreds of different companies, right? Now, if you were to try to go buy one stock of every company in the S&P 500, it would cost you over $100,000. So it's just not feasible, right? Now, the drawback is ETFs don't pay dividends. ETFs can give you exposure to a lot of different sectors and industries and provide steady gains and help keep your volatility low. The next biggest part of most, but not all portfolios, should be stocks. Obviously, that's why we're here, right? We want to key in on the stocks that we think give us the best odds of success. We only take a position if we feel we have a clear market advantage, right? If we don't feel that advantage, we don't have that upper hand, cash is always the best position, okay? Next, of course, is options, right? Everybody loves options, but we'll talk more about that in a minute. But lastly, let's talk about bonds. And this is something that I think a lot of us overlook. So what is a bond? Well, unlike a stock, a bond does not give you ownership in a company. A bond just means you loaned an entity money, and they are obligated to pay you back in a set time at a set interest or variable interest rate, right? For larger portfolios, bonds are more important. We won't worry too much about that for this video, okay? Now, beyond diversification of asset classes, it's just as important that we're diversified within those classes, right? We don't want to pick one ETF, one stock, and one bond. Instead, we want to spread our eggs into a few baskets. Now, let's talk about options, and at the same time, let's incorporate some of what we talked about earlier regarding self-control and greed. Options are one of an investor's most powerful tools, right? Sadly, all too often, we get inexperienced investors with small accounts that use options as extreme leverage, betting their entire account on one or a few contracts. This is almost always, no, not almost always, this is always a recipe for failure, okay? We all get lucky once, and then it's just like a heroin addict, we'll be chasing that high forever. And like addiction, it will lead to destruction. In this case, your portfolio. I hate to break it to you, but if any of the following are true, you probably should not have options approval on your account. Do you have trouble with drugs, alcohol, eating, too much time on social media maybe? If the answer is yes to any of those, you likely have an addictive personality with addictive tendencies, and those tendencies tend to translate into your investment decisions, right? So we want to build confidence as a trader. Now, what happens when we aren't too greedy? When we use our greed to our advantage? Our self-control increases, and more importantly, so does our confidence as a trader. Why? Because as a result of our self-control, we're more diversified. So when we're presented with negative market conditions, whether they be in the course of 10 minutes or 10 months, we have more self-control, right? This means less panic selling, chasing, and most importantly, this means confidence for you. This means taking your profits slowly and steady, realizing gains that add up in a very real way, okay? I like to aim for 3% as my limit for options on all of my accounts, okay? I say aim. There's always going to be some fluctuation, but everybody knows that that is my golden rule. If you knew that and still have been unable to follow that rule, it's probably time for you to remove options approval from your account, right? Options is not for everyone. Now, let's say you have a $10,000 account. You'd have $300 available for options based on my 3% rule. In this case, that's probably your first indicator not to utilize them at all, as your account is too small, okay? So here's my thoughts. For a good standard account, 40% of your account is in ETFs. Now, another 30% is going to be in stocks. And then you may have somewhere around 20% in cash, and that may fluctuate between 0 to 20%, right? But you always want to have cash on hand for making new trades, right? And then you may have 10% in bonds. Now, in this example, you'd have $3,000 available for stock trades, right? Because we're looking at 30% of $10,000, okay? So if you put $500 of that into each trade, that would give you 6 stocks to watch. And that would actually come out to 6% per position, which is a little heavier than I prefer. But for a smaller account of $10,000, 6% is probably okay. For larger accounts, $20,000 and more, I'd like to see people within that 3% range, if not lower. Should also note that bonds probably shouldn't be a large part of your portfolio in 2022. Let's face it, I mean, with all the inflation right now, bonds are getting smoked. Okay? I'd also like to throw it out there that if you are struggling with any of your own addictions or struggles, whether they're impacting your trading or whatever it may be, every Sunday we do hold an online church service at 12 o'clock, and that's Eastern time, and I believe it's 9 o'clock Pacific time. Shoot me a message if you want to be added to that. Thanks for watching. Hope this video was helpful, and at the very least gave you guys a few ideas you could make on your own to have a better and more prosperous 2022. Thanks, guys. If you enjoyed the video, click the like and subscribe button, and if you aren't already a member and you're interested in signing up, head on over to teamrvr.com. We are running a free trial right now for a week. All right, guys. Peace. Happy trading.